Hello and welcome to another Small Gold live stream. It is September 10th, Tuesday, 2019, and tonight's topic is shifting silver demand. Is that a blessing or a curse? This morning we did a live stream. Many of you missed it. It was a small audience, but we discussed the size of the silver market. And it's not just the size of the silver market that makes the silver market volatile and prone to spikes and dives, but it's also the mix of demand. In general, we've been speaking on this channel about the small size of the silver market and the smaller size of the investment portion of that demand, but we haven't been talking about how the demand itself shifts. So you've got a very explosive mixture here. So if you go back to the 1970s and 80s, the primary driver for silver demand was photography. The big demand was 135, 150 million ounces a year. I'm just looking at from 1977 to 1984. That was the largest driver. And then you had jewelry and silverware, and that was 90 million ounces, 70 million ounces. But then it fell off when the price of silver rose, obviously, in 1980. And interestingly enough, throughout the 80s, it did not recover. And this is very similar to what we talked about this morning, or maybe it was the other day, where people bought silverware and used to buy silverware and used to hold silverware in the United States, used to give it as gifts. Pretty much I would say every family had one. We had one. And we sold it. Many families sold their silver in 1979, 1980, and they didn't replace them. And you can see that in the silver survey. You had silverware being purchased, a lot of jewelry, in 77 and 78, 79, and then it falls off a cliff in 1981 when you have the first full year after, not necessarily, the prices weren't higher in 1981 than they were at the end of 1980. They'd continue to go down, but the silverware demand did not pick up again. It looks like people got burned on the silver. It did not return to it. So the old demand profile was basically photography, jewelry, silverware. Electronics during the 70s and early 80s would only account for between 60 and 75, 80 million ounces. Now, the last 10 years, it's gone down from about 310 million ounces, which is a big increase from 65, 75 million ounces in 2010, 2011. And now it's at about 230, 240 million ounces. So they've managed to halt the increase in the amount of silver that's used for electronics after basically running up for decades from the 1970s through the 80s. But then that growth rate has stopped on electronics. But what we've then seen is solar panels have come along in the last 10 years, eating up a certain amount of demand. But even there, they've slowed the growth in the amount of silver used, and photography is gone, pretty much. It's not a significant driver of silver demand. And then we're going to take a look now at some more recent trends in the shifting demand profile. This all against the backdrop of this morning's discussion, which you haven't seen, go check it out. It's how big or how small is the silver market. And we went through some charts there, and we showed that the size of the silver market is so small that it's less than the fines that JP Morgan and Bank of America and Citibank pay over the last 15 years. And it's smaller in actual dollar amounts than about 24 billionaires. So the silver market is small, very, very small. And the way we added that up, we looked at silver stockpiles and silver mining production. That basically gave us what we were looking for to add up the available silver. And obviously there's other silver other than what you can identify that's in stockpiles at COMEX and in ETFs and mining, but that's your go-to metal if you needed to find silver. We're not talking about all the potential scrap silver or electronic waste, but essentially the ready-to-go silver market is very small. Now what we're going to look at is the profile and the demand shifting of silver that's happened over the past few years. And then we're going to take a look at what would happen if there was an increase in demand. Not if somebody was going to try to buy it in one swoop, like a billionaire. Billionaires and billionaires are going to have all the silver. No, if we had, for example, if just Americans that had a job and were working wanted to save a certain amount of silver, physical silver each month, what that might do to the small silver market. So let's take a look and go all the way back to 2005. Because that's more relevant. When the 70s and 80s, you didn't have the same electronics. Photography was a big driver. But 2005 is recent enough where photography was on the wane. Electronics were pretty much where they are now, in a sense that every household, people had devices. The devices are smaller now. But in any event, 2006, this is not 2005. 2006 was... It's not that distant past where the world was very different place. And the silver demand was pretty much the same for industry as it is today. It's less photography, more electronics, more solar, more other industrial uses. So in 2006, industry was 70% of the demand of silver. And also, the reason 2006 to now is relevant is the amount of silver mined during that last 10, 13 years it's gone to incline a bit, but it's been around 800 to 900 million ounces a year. So it's pretty much the same amount of silver coming online with some growth. So 70% of silver demand in 2006 was for industry. And silverware jewelry was 25.4%. Okay. But look at the silver coins and bars. Back in 2006, this is before the financial crisis, silver investing was not a big deal. There weren't ETFs, and people didn't really stack silver eagles to the extent that they do now. The sales, we've seen this before, American silver eagle sales commonly under 10 million a year. I think 1996 is the big year that people collect. Is almost a key date for silver eagles. I think they sold 3.63 million, which indicates that silver stacking was not a popular thing in the 90s or early 2000s. So silver coins and bars only ate up about 5%. But even more interesting, if you go back to 1984, 1983, you're looking at 1981, only 10 million ounces they listed as being sold as investment. So when we have this 5.2 here, at least you're still talking a decent amount. You're talking 70, 80 million ounces. But right now, in the last couple of years, I think we peaked over 200 million ounces. So silver demand for coins and bars, even in 2006, was elevated over what it was in the early 80s. You had basically 10 million ounces being sold globally, really, as an investment. Coins and bars was not a popular thing. So you're seeing by 2006 that coins and bars are making a dent, at least as a percentage of overall silver demand, and then silverware and jewelry. Now let's move up now. 10 years later, financial crisis has already hit. We're in the peak of the lowest silver prices after the peak of 2011 and 2015. By 2015, we had a big surge in sales of American Eagles, Canadian Silver Maple Leafs. For the last 4 years before 2015, we had all the silver pumper channels. There was a lot of awareness on silver, people re-examining its monetary history, concerned about global debt crisis, concerned about QE. So silver became a go-to metal as well. And at one point in 2015, I think it was, the U.S. Mint sold almost the dollar equivalent in silver as it did in gold, which is pretty remarkable because at the time, I think you had to sell 60 times more ounces of silver in order to do that. So the Mint was very busy. And you can see in that year, silver coins and bars were almost 25% of overall demand. That's up from 5% just 9 years earlier in 2006. And silverware and jewelry held their own at 25%. What this has the impact of doing is cutting into the amount of silver that's available for industry and potentially causing bottlenecks, shortages, and price increases. Well, it didn't happen in 2015. I think it would have happened if this type of selling or this type of buying of physical bullion in 2015 carried through in 2016. It did the first 4 months and then it stopped. And basically it's stopped ever since. It's slowed down significantly. But I think that if 2015 silver physical demand continued into 2016 and 17, I think at that point you would have industry screaming that there is an issue getting silver. Now, silver's gone through this before. Let me read you a quote. Now, remember, everybody says, or everybody knows, that the U.S. took the silver out of the coins in 1965. And that didn't just happen. Lyndon Johnson didn't just wake up in January of 1965 and say, let's not make silver coins this year. In fact, they made 1964 dated coins well into 1965 in order to make enough of them so that people wouldn't hoard them. But that's a different story. Kennedy started this out in January of, well, he actually, I don't want to get into the whole silver Democrats thing because it's a 100-year story, and we do have Smaulgld videos on this, the cross of silver and the cross of gold. But Kennedy was the first Democrat to break from the silver tradition that the Democratic Party was always a big fan of silver. It was an inflationary metal. Americans mined it, and there's a couple of quotes here. A lot of people aren't aware of. People think that JFK was some type of anti-Fed crusader and he got killed by the Fed. It's complete nonsense because it was exactly the opposite. He may have had troubles with the CIA and the mafia and a lot of other powerful entities, but the Fed was not one of them. But what he said in 1961, he said, in my direction, sales of silver were suspended by the Secretary of the Treasury. As further steps, I recommend repeal those acts that oblige the Treasury to support the price of silver, and repeal the special 50% tax on transfers of interest in silver, and authorization for the Federal Reserve to issue notes in denominations of $1. So he wanted more Federal Reserve notes. He wanted to get rid of those pesky silver certificates, so as to make possible the gradual withdrawal of silver certificates from circulation and the use of silver thus released for coinage purposes. He says, I urge the Congress to take prompt action on these recommended changes. Kennedy's view was explicitly, I urge a revision in our silver policy to reflect the status of silver as a metal for which there is expanding industrial demand. Bold, except for its use in coins, silver serves no useful monetary function. He did not believe silver should be money. He didn't consider coins money. He was talking about backing the money with silver certificates and that monetary function. He said that silver is pretty much good for making coins. And then they started to think maybe we can't even waste the silver on coinage. So then industry was really moving up at that point. Electronics were the big driver at that point. Military and so on. And using it to back the silver certificates, Kennedy and Johnson felt was a waste of time. We still had the Bretton Woods gold standard, so the dollar itself, at least with respect to central banks, was backed. If they had dollars, they could bring them to the U.S., and therefore the dollar was backed by gold, at least in the international monetary system. But Kennedy wanted to remove all that silver that was just stockpiled there and waiting for people to turn in silver certificates that were circulating. He went after that. He wanted those silver certificates redeemed, replaced, and then replaced with the Federal Reserve notes. So this is a problem with silver or any commodity money. If you need it for industry, then you say to yourself, why are we hoarding it somewhere? Now, the thing about gold, which is why gold, this is what a lot of the Bitcoin maximalists don't understand. They insist that gold was the superior money and that there should only be one money, and that the reason gold went out was because we needed one money. No, that's nonsense. The reason gold went out was because gold is more expensive. And gold is just as useful as a commodity as silver is. In fact, silver is more useful. But silver's problem is it's more plentiful. So and there's more uses for it at these prices that it gets used. And so that's a problem if you want it to be money, is there people are demanding it to be used. Gold's primary use demand, and we talk about this all the time, the profile demand is jewelry and monetary or investment, which means people are not using it to do anything with. They're holding on to it. They're using it for adornment and beauty, and they're not using it in industry very much. Maybe some dentistry, some high-end technology, some high-end astronaut costumes that they wear that have reflective gold on them. But for the most part, gold is not an industrial metal. Silver is, but the problem with silver is, as we've seen, go back to the chart in 2015, this is the same problem Kennedy was having. Industry was using up a lot of silver, but they had a lot of silver lying around in a vault to redeem silver certificates. They were using a lot of silver to make silver coins. That's when they realized, oh, we don't have to make the coins out of silver. We can make them out of copper and nickel. And that would leave more silver for industry. Because you think about what happened in the 60s and early 70s, all Western nations, Australia and Japan and Canada and Italy and France and Switzerland, all had they all had silver coinage, and again, they all had a demand for silver, which meant that all that silver that went into making coins would not be available for industry. And I've got another chart that I like to show. I don't have it tonight, but it shows that in 1964 coins, dated 1964, U.S. coins, dimes, quarters, and half dollars, the United States Mint used 550 million ounces to mint those up. Well, you can see from a government's resource point of view that that's a waste of silver, because it can't be used for industry if people are using it to exchange. And so it's the same thing they did with the paper money. People use the paper money instead of the metals. You save on the metals. Not getting into the monetary benefits or drawbacks of doing that, but you can see how if somebody's looking at it from the industrial side, they try to come up with ways to make a commodity money remove that monetary demand for it and push it into the commodity demand. And what we had in a mini version of that, because obviously selling 47 million silver eagles in 2015 is not the same as minting up 550 million ounces worth of dimes, quarters, and half dollars. Not just minting them up, but giving them out. I mean, they weren't. Remember when the 47 million silver eagles were minted in 2015, you had to buy them for a premium. When they minted up 550 million ounces worth of dimes, quarters, and half dollars, they were just thrown out into circulation. And every country was minting large amounts. So, in 2015, you still had massive growing industrial demand, but what was happening is, if you look at the difference now, you went from a 5% demand, basically no demand, just collectors, people not a big amount, in 2006, and by 2015, I think it's getting a little nerve-wracking for industry, because they see this growing non-industrial demand, and they're concerned that, if people keep buying coins and bars, and of course silverware being on the rise and jewelry, it's eating into the industrial demand. You went from 70% to 52%. And then the brakes slammed on mid-2016, and by 2017, look what's happened. Well, by 2017, silver coins and bar demand had been knocked down from 23% all the way down to under 15%. Giving industry almost back to 60%. But silverware and jewelry, very tenacious. And a lot of that has to do with not the Chinese, not the Japanese, but the Indians. They're continuing to buy silverware and jewelry, and that's the rise of the middle class in India. So demand is strong for industry. Demand is growing for silverware and jewelry in India. You can't have silver coins and bars growing in demand either at the same time, because the pie is only a certain size, and the amount of silver that comes online isn't really growing. So industry thrifts a bit, and they slow the amount of demand that they need in industry and solar panels and electronics. But silverware and jewelry, the only thing that's going to slow that down is price. gets too expensive to buy a silverware set in India, and they say, okay, we're not going to do it. But as long as prices are low, they're going to keep buying silver and silverware as long as they are earning decent middle-class wages. Coins and bars are more discretionary, even more so than silverware and jewelry, and they reflect people's sensitivity to whether they need to buy silver or not. And generally, as we've noted many times, most of that nervous Nelly money goes into gold. It doesn't go into silver, but it had been going into silver and starting to go into silver in a big way. So you can see 2017, you can breathe a sigh of relief if you're in industry that your silver is not going to be taken up by silver stackers. Now, 2018, you saw a little increase, somewhat of an increase in demand for silver, but this year it's back down again. But silver coins and bars went back up to almost 18%. Silver jewelry continued to climb. Silverware and jewelry continued to climb to 26.5%, and industry was knocked down to about 56%. So this pie is very important. It was important in 1964-65 when Kennedy and Johnson were concerned that too much silver was being used either as money to back up the silver certificates or just being used as coins when there was an increasing industrial use. And there's no different today. There is an increasing industrial use. May not be off the charts increasing industrial use, but it's there. And the more silver that's hoarded as coins and bars, it just pushes back against the amount of silver that's available for industry. And at least, we were talking about this last night, at least when you have silverware or jewelry you wear, so you can see you're using your silverware, using your jewelry. And silverware, we were saying, if you could have silverware that was priced at or around the spot price of silver, well, you're not really hoarding it because it's something you have to have. You have to have eating utensils. But coins and bars, they're just sitting around. And that is what they would call dead money. It's just savings, but it's even the type of savings that never gets deployed as well as maybe cash in the bank might get deployed in a business. Generally, when people have silver savings, they may hold on to it their entire life and pass it on to their children. So that's something where this whole dynamic can explode. And this is why I've said for the last few years that there was nothing on the horizon that would make silver skyrocket. And the reason was there was no immediate need or demand other than outside of people who were just obsessed with silver to have silver in their portfolio, and there wasn't much demand for it. And then silverware and jewelry, it's not growing rapidly other than in India. And then the industrial demand is pretty much on an even keel. However, it's such a small market that all that has to happen is that red box there or the red pie slice with the silver coins and bars, if it starts to ratchet up, it creates imbalances in this very small pie that's there. So let's look now and see. There's not much of a trend yet. I don't have 2019 because I don't have the industrial numbers and I don't have the silver jewelry numbers. And we don't have any increase we've seen in American Silver Eagles or Canadian Maples or Perthman Silver, actually down from last year. But let's look at the trends in the three major demand drivers of silver. Silverware and jewelry are pretty consistent. You know, they're consistent in the last 15 years, and they were consistent back in the 70s until the Hunch Brothers debacle in 1980, 79, 80. It drove people out of silverware and silver for about 7 or 8 years throughout the 80s. But it looks like the Indians have revitalized the silverware market because that's something that went away in the United States culturally. And Americans, as I mentioned, if you're older, if you're over 50, you probably remember a silverware set either at your house, a relative's house, a grandparent's house. They're non-existent today for the most part. We're going to get into what would happen if Americans took a liking and a renewed penchant for silverware sets or for increased amount of investment in silver. But look at the silver coins and bars. You can see that's a very volatile mix right there. You had 5% in 2005, then it went up to 22% in 2015, back down just 2 years later, 15%, then back up to 17%. And it's not so much that industrial demand changed much. The percentage on industries that have been moved around are a result of the silver coin and bar and the silverwares changing because industrial demand has been pretty much flat, growing slightly over the last 15 years. But it's the silverware, jewelry, and silver and coin bars that have shown bigger increases in demand, and then also in the silver coins and bars, somewhat of a decrease the last couple of years. But still up from 2005. We're 2.5 times higher, even in 2017, when it fell from 22% to 15%. But that's up from 5.2%, almost threefold from 2005. So you can see the real key, I think, to driving silver's price today is going to be the coins and bars without having any real commodity crunch and having continued silverware and jewelry demand. But keep in mind, if the price rises, the silverware and jewelry demand will fall off. We saw that in 1980. We saw that in 2011. If the price gets too high, that discretionary purchase goes away. All right. Now, I think we want to look at, yes, what if, now, forget the Indians, they continue to buy, but what if Americans actually wanted to buy silver as a, let's say for their 401k, or they wanted to buy it just as personal savings? Well, one thing that's interesting is most companies, if you work at a corporation, they will not offer you any type of precious metals IRA or 401k plan. It's part of the fiduciary duty. They think it's somehow risky. They don't want to get their people into it. But yet they'll offer stock funds that'll have Tesla in it. So, I mean, it's just the perception that they've created. Your standard money manager is pretty much afraid of silver and begrudgingly likes gold, but doesn't like gold, will put up with gold because they just grew up with, I mean, most money managers today, again, are under 50, and they just grew up with the stock market in the 80s and 90s, and they just view stocks as the way to go. They've had that drilled into their head that stocks always go up, and that's been true since 1987, since Greenspan put the put in, and all Fed presidents since then have made it kind of their goal or their objective to always make sure that the stock market doesn't have a prolonged dip. And the reason for that is they view the U.S. stock market as an asset of the United States, almost like national security. So it can't go down. And that with the dollar, that's how they play the game. So stocks, self-fulfilling prophecy, have since 1987 performed very well. But let's say people wanted to buy silver. Well, they're not going to be able to buy it through their employer. But let's just say they wisen up and they say, we want to buy small amounts. Let's say 1% of the labor force, not 1% of the population, because you can't count people that don't have any money, that don't work, that are 12 years old, that are 6 years old, that are 80 years old. You got to take just your labor force, and that's most likely the people who be able to buy something are people who are employed. But let's say only 1% of the labor force, and I calculated that just to be 1.6 million people. And let's just say they wanted to save an ounce a month. It would be 19 million ounces additional demand. And that's a lot. I mean, it's not, there's 800 million ounces mined every year, but still, that's basically nobody buying no ounces. But that's probably what we have today. 1% of the people buying about 10 ounces a year, 12 ounces a year. It's probably about right. I don't think there's that many more. But let's say they stepped up their game and they bought 2 ounces a month, which would be 24 ounces a year, or they wanted to buy 3 ounces a month, up to, they'd end up buying 36 ounces in a year. It cost them $650, these are a little older prices, $650, $700 that year. It's not enormous, but that would add 57 million. That's a pretty big number. That's a very small percentage of the people working, 1%, buying just 3 ounces a month or 36 ounces a year. That's less than 2 rolls of Silver Eagles. That would be 57 million ounces. That's a lot, as that chart shows. Now let's just say twice the amount of people, Just 3.2 million, or 2% of the workforce, does the same. They buy 1 ounce a month. They buy 12 ounces a year. They spend a couple $100. That's 38 million ounces, though. Let's say they double their purchases. They spend $400. Well, that's 76 million ounces. And let's say they go whole hog, 2% of the population, 3.2 million by 36 ounces, or less than 2 rolls. That's 115 million ounces. Now you're getting into a very big number. Now you're going to start pushing into that pie, the industrial pie. And then the chart goes on. If 4% were to buy 3 ounces a month, which 4% is not a lot. That's 6.4 million people in a country of 350 million people. And they're going to buy less than 2 rolls of American Silver Eagles. 230 million ounces. Well, now you got a problem. If that small amount of people are buying that small amount of silver, well, that small amount of silver is it's 28% of the overall silver mining production, and you still have to satisfy industry. You still got to satisfy India. You got to satisfy the rest of the world, and you got these 4% of the workers basically buying less than 2 rolls of Silver Eagles a year. Well, go one step further. This is never going to happen, but this is all it would take. What if it got a little even more, I wouldn't say outrageous, but let's say we moved up a little bit higher and we went to buying some more? Well, what if 4% of the population, that's 6.4 million, bought 36 ounces? That's 230. We already did that one, right? Yes, we did that one. I think the chart goes, does it go any higher? Let's see what this, here it is. What this chart shows is the same 1 to 4%. We never even get over 1.4%. We never get past 4% of the population. We're always working with 1.6 million to 6.4 million people. The first chart showed if they bought 1 ounce, 2 ounce, 3 ounces. But now, if we take 1% of the population, and it's not outrageous to think that they might save 4 ounces a month, or 5 ounces a month, or 6 ounces a month. And if they did, you're talking 1% of the population spending $1,300, $1,500 a year. That's 115 million ounces. But if you go to the far bottom corner and you say, let's say 4% of the working population, which that's less, that's less than 1 in 10. That's nothing. 6.4 million out of a population of 350 million. And let's say they bought the full amount, which is not a lot, 6 ounces. I mean, if you have a job, it's not a lot. 72 ounces a year. That would be 460 million ounces bought just by 4% of the American workforce spending $1,500 a year. That's 58% of the global mining silver production. So now when you hear people are buying silver hand over fist, they're not. Because these are the numbers that you would have, and this isn't even buying. This is nobody buying hand over fist. 4% of the population buying 72 Silver Eagles a year. That would be 460 million. They don't make that's what they've made in like 30 years. In a good year, they sell 47 million. It's not 6.4 million people buying 4 rolls a year. That's not much if you think about it. 4% of the population buying 4 rolls a year, or 6.4 million people buying 4 rolls a year, would take that would really be a problem. That would be 460 million ounces. But again, that's not happening. But if it did happen, you can see small market. Now, the flip side to that is some guy decides, like Buffett did in 1997, I believe, that he or she wants to pull up a couple of 100 million ounces of silver. Well, that could have an impact on it. But let's just see. Here's the everything I just showed you was numbers. Here's a chart. It probably makes more sense. On the bottom, you have 1, 2, 3, 4% of the population. And then it just shows if they bought 12 ounces a year, 24 ounces a year, 36 ounces, 48 ounces, 60 ounces, 72 ounces. And if 4% of the population bought 72 ounces a year, be over 450 million ounces. And that shows that it doesn't take much. There's not that much silver. So when people say silver is rare, yeah, it is. And it's cheap. And Let me show you how much it all costs. We covered it this morning, but this will be the coup de grace when you see how little it is. So this is the annual silver mining, 800 million ounces multiplied by, I think it was $17.92 this morning when I did it. What's in the silver ETFs and the COMEX warehouses, it's worth $35 billion today. I mean, that's a pittance because what was QE? 200 billion a month? This is $35 billion. Bank of America, JP Morgan, and Citibank have paid $106 billion in fines since 2000. This doesn't include Wells Fargo and any of the other criminal banks. But look at Bezos, Gates, and Buffett. Those three guys. $310 billion. One of them, if they had their net assets in cash in a checking account, could write a check for the entire amount there. So, yes, it is a small market. And it doesn't take much for it to get ignited. And as I say, it's not going to be because of yoga pants. It's not going to be because they're building more electronics or solar panels. That's not going to do it because they've got that under control. And it's probably not going to be because Indians buy more silver or silver jewelry. It's going to be if a small percentage of the population catches on and makes some bigger bets in the silver market. All right, I think that's all we got for you tonight. We're going to put back up, I believe. Yep, those are all the charts there. And remember, go back and look at this morning's video. It's much more detailed on the size of the silver market and the pitch for Smaulgld patrons. I lost a patron last night. I lost one, but I gained 3. So at least that's a net 2. We can't have that. We cannot be losing patrons. All right, guys. Well, let's see what you guys are saying tonight in the comments section. You've been quiet the last 2 days, but let's see what you have. Ken Singsta, he says, greetings, stackers. Nomadic Giant is here. Loco 1J. At this point in time, it's so much easier to recommend. Oh, I lost it. Friends and families invest in silver rather than gold, especially here in Aussie land, as the gold is at an all-time high in Aussie dollars. Well, but was it easier 2 or 3 years ago? Remember, the problem with the silver pumpers, they've been pumping silver for 5 years when they should have been pumping gold. The gold-silver ratio is unsustainable at 55, at 60, at 65, at 70, at 75, at 80, at 85, at 90. Smoking the whole time it was going up. They were telling people to sell gold and buy silver. That turned out to be a 6-year losing bet. All right, hitting for contracts. Do you still feel... I'm going to either think or analyze, but I know what you mean. That pre-33s and 90%, I don't know if I ever had a thought or feeling on this, or 90%. He's talking about pre-33, 90% gold, or pre-65, 90% silver. By the way, they did make a couple of gold coins in 1933. They still call them pre-33s. They should really call them pre-34s, but the 33s are so rare, the gold coins. But in any event, we'll still have its occasional 25 to 45% spike when things get dicey. Well, yes, I do believe, hitting for contracts, that silver and gold will have spikes. The question is whether you'll be able to, if you have physical coins, be able to sell them at that price. I wouldn't imagine that the physical price would decouple from the paper price or the digital price. So I'd imagine if, let's say, silver went from 17 to 25, I don't think if you try to sell it you would get $18. I would believe you would get... I do believe, however, one of the reasons people do buy now ETFs and they have physical stored is that it's a lot easier to take advantage of price swings with an ETF. I mean, you buy the gold GLD or the SLV now, it goes up 25%, you can lock in a 25% gain. You don't have to drag anything to a coin shop or call up the broker to move it from one vault to the other, and it's... But I don't think there would be you wouldn't have the spike in the physical as well. I would imagine you would. Here you go. Hitting for contract says, my wholesaler sends set after set of gorgeous vintage silverware to the refiner. That is true. that local coin shops will get silverware. They'll get it from estate sales, and no one will buy it. They're not going to pay a premium for it. And you can probably buy it from the silver, from the local coin shop for a price around spot, maybe a little more, a little less. I don't know what they charge, but yeah, no one buys silverware anymore. That's in the United States, and they just toss it in there. That's what they do with junk silver. They call it junk silver, right? The pre-1965 coins. There could be some very nice Franklin half dollars or Mercury dimes, whatever. They'll throw them in and melt them down for the silver value. Yoga pants. Nomadic Giant would love to see a similar chart for Bitcoin. Similar chart to what? You must have made the comment when I was showing a chart. I will try to oblige you, Nomadic Giant, if I know which chart you'd like to see similar for Bitcoin. I'll give him a chance to respond to that, and then I will let you go. Let's see if there's any more comments here. Nope. All right, well, he can always hit me up on direct message or email. Tell me what type of chart he'd like to see. Oh, 1 to 4% of the people, yeah, if they were to buy a Bitcoin or Litecoin, I'd have to do a different analysis because remember, yeah, I know what I can do. There's right now there's 18 million Bitcoin in circulation. There's another 3 to be mined. Litecoin, there's 63 million in circulation, 84 million totally to be mined. But then you have to calculate how many you think are missing. And there's not much. We don't know. It's actually an easier calculation to do because you just know, you can just make an assumption how much Bitcoin is available and what the demand would be compared to what it's been. Now, the problem with Bitcoin is it, quote, trades, but we see how much trades, and there's really not Bitcoin being traded on Binance or Coinbase. It's just that people are trading the price back and forth. So we won't really know what the physical deliveries are in trading. I guess you could do it through blockchain analysis, but you won't really start to see it in one spot so you can gather all the data easily, is when you start to see how much is unbacked and how much they actually deliver. That'll give you something like when we look at the Shanghai Gold Exchange or the COMEX. You could see in one place how much is being delivered on the contracts, what percentage of the contracts are standing for delivery, and so on, and how much are in those warehouses, how much Bitcoin will be in the backed warehouse. All right, everyone, I want to thank you for joining me. Don't forget, sign up to become a Smaulgld patron or a Smaulgld Subscribe Star member, or to donate via Bitcoin and Litecoin. Thank you very much. Somebody sent me a very nice donation in Litecoin last night. I do appreciate that. 2 nights ago. Didn't see it till today. Or PayPal one-offs, or I love getting notes and gifts through the mail, too. It's Smaulgld LLC, P.O. Box 714, Dover, New Hampshire, 03820. I did manage to pay for the price of the box through donations, so it's all gravy after that. So thank you very much. And if you're going to buy gold or silver, please consider doing so through the Smaulgld links. I do get a small commission there. We have links to Golden Eagle Coin, Money Metals Exchange, and SD Bullion. You look at those links, you pay no more, no less than to visit them anyway. So check them out, compare pricing and shipping. Always check the shipping charge, because you could think you're getting a good deal, but if you're not getting free shipping, or they're charging you more for shipping than another one. So you got to do your homework. You got to compare the sites. And don't forget the Smaulgld Mugs. So we will see you, I hope, tomorrow. Have a good night. Heading contract says, I think your charts are showing up to 40% premium on both 90% and Eagles. What charts are you looking at? I'll have to take a look at that. I stopped running. I used to get the premiums on the American Silver Eagles, but I haven't had that chart made in a while. All right. Have a good night.